While the market retreats to Fear Index 33, institutions are aggressively absorbing a 21% collapse in RMBS on surging Volume 78 conviction. The narrative screams panic, but the structural tape reveals massive accumulation hiding behind policy-driven volatility. This isn't a liquidation. It's a high-conviction institutional reset. We're starting with the RMBS volume anomaly and the engineering reality behind this 63 lab score buy. By RMBS at 63, the lab is in. Institutions are piling in with volumes spiking 78%, signaling deep conviction in near-term IP monetization. This isn't speculation. Q1 2026 10Q shows 92% gross margins on memory interface chips, the highest in 8 quarters. The data teardown reveals a hidden pivot. RMBS is quietly dominating DDR5 adoption in AI servers, not just defending legacy patents. RMBS is currently a liability because its HBM3E memory controller IP, the logic managing data flow between the processor and high-bandwidth memory, is hitting a 1.2 terabytes per second bandwidth ceiling that custom OpenAI silicon aims to bypass entirely. The lab tracks RMBS through its RCD, register clock driver, a specialized chip that buffers command signals to maintain signal integrity on high-density DDR5 memory modules. While RMBS successfully pushed DDR5 speeds to 6,400 metric tons per second, megatransfers per second, the engineering reality is shifting toward custom ASIC, application-specific integrated circuit, designs. Compared to competitors like Montage Technology, RMBS is exposed as hyperscalers move memory control in-house to eliminate the latency penalties inherent in third-party licensed architectures. Today's 21.26% plunge to $111.27 signals that the market finally recognizes the physical moat around standardized memory IP is evaporating. When major AI players move toward vertical integration, they redesign the interconnect, the physical wires and protocols enabling chip-to-chip communication, to circumvent standard PCI, Peripheral Component Interconnect Express, the Common High-Speed Interface, and CXL, Compute Express Link, a protocol for shared memory access. With trading volume 78.2% above the 20-day average, institutional capital is fleeing the structural risk of RMBS being engineered out of the next-generation AI data center. The lab concludes that as long as the industry pivots toward proprietary silicon footprints, the RMBS hardware roadmap remains fundamentally disconnected from the leading edge of compute. RMBS is facing a structural valuation reset as the 4.35% 10-year yield, the benchmark interest rate for long-term corporate debt, exposes the fragility of its negative 1.8% EPS growth. The lab sees the Fed's decision to pause rate cuts as a direct assault on high-multiple IP, intellectual property, the legal rights to chip designs, firms that rely on future royalty streams. With CPI, the Consumer Price Index measuring inflation, at a cool 0.6%, the real interest rate is suffocating growth. Prediction markets now price only a 36% chance of a cut by June 2027. Meaning the cheap capital that fueled the AI land grab is gone. While revenue grew 8.1%, RMBS cannot outrun the friction of protectionist tariffs. These trade barriers act like a TDP, thermal design power. The maximum heat a chip can dissipate, wall for the entire balance sheet. The geopolitical landscape has shifted from global integration to a fragmented trade war over Greenland and restrictive export administration regulations that govern how dual-use technology is shared with foreign adversaries. This weaponization of the supply chain creates a dead zone for RMBS's interface controllers. As the U.S. moves toward D5 country designations, a specific list of countries subject to strict arms and tech embargoes, the addressable market for high-speed memory architecture shrinks. This isn't just uncertainty. It is a quantified loss of regional revenue exposure. With a short float, the percentage of shares held by investors betting the price will fall of 8.5%. The market is smelling blood. The lab views this. Segment 3. The PR Insider Filter. RMBS Incorporated, RMBS. RMBS just told Wall Street it's riding the AI memory wave, Unprecedented demand for high-bandwidth solutions and supply chain resilience are the buzzwords. But here's the first crack in the PR veneer. Insiders dumped 70,236 shares in the last 90 days. That's not a trickle, it's a sell-off. When executives cash out at this magnitude, it's not about diversification, it's about visibility. They see the pipeline, the backlog, the real demand, and they're voting with their feet before the rest of us see the numbers. The official story leans on AI-driven growth, but the insider activity screams caution. These are the people who know whether the next-gen HBM, high-bandwidth memory, the stacked DRAM chips that feed AI accelerators, contracts are locked in or just hopeful handshakes. If the pipeline were as robust as the press release claims, you'd see insiders holding, not selling. Instead, they're treating their own stock like a melting ice cube. Now let's talk earnings. RMBS missed EPS by 5.3% last quarter, $0.63 actual versus 67 cents expected. That's not a rounding error, that's a demand signal. And R&D spend, up 15.2% YOY, now 26.5% of revenue. On paper, that's innovation. In reality, it's a red flag. When R&D grows faster than revenue, it means the product isn't scaling, it's chasing. Management calls this investing in future growth. But what they're not saying is that the current product portfolio isn't generating enough cash to fund itself. The lab's PR read, "What management?" Institutional conviction is surging with volume 78.2% above the 20-day average. This is a targeted bet on RMBS's memory interface, the circuitry managing data flow between processors and RAM. A bullish MACD, moving average convergence divergence, a momentum indicator showing trend shifts. By NVTS Semiconductor, lab scores 72 out of 100. Their GaN chips achieve 94% power efficiency at 2 MHz switching, doubling silicon's frequency limit. That cuts charger size by 70% while surviving 25-year voltage stress cycles. This isn't incremental. It's the core enabler of the $15 billion compact power adapter revolution. The data teardown exposes who really owns the high-frequency future. NVTS is a liability in the current AI infrastructure build-out because it's GaN, gallium nitride, a wide band gap semiconductor that switches 20 times faster than traditional silicon, cannot yet overcome the thermal density limits of 3,300 watt AI power supply units. While Wall Street fixates on adoption rates, the engineering reality is a physical ceiling on power density measured in watts per cubic inch. NVTS utilizes a proprietary GaN-fast architecture which integrates power, drive, and protection onto a single GaN chip. However, at the 2 nanometers process node, the latest generation of lithography for advanced logic, the transient voltage spikes from Blackwell GPUs demand a level of ruggedness that GaN currently struggles to provide compared to SiC, silicon carbide, a material that handles higher voltages but operates at lower frequencies. The engineering gap between NVTS and competitors like Infineon lies in the integration of GaN-on-Si, growing gallium nitride crystals on top of silicon wafers. This process creates lattice mismatch, structural defects where different crystal structures meet, which lowers yield rates, the percentage of functional chips per wafer, to roughly 80% for high-power applications. As the Fed pivots and trade restrictions tighten on D5 countries, nations like China subject to strict export controls, the cost of these manufacturing inefficiencies scales exponentially. Today's 17.38% drop to $15.12 reflects the market realizing that NVTS is trapped between the high-frequency benefits of GaN and the superior thermal conductivity of SiC. The hardware reality is that GaN is not yet the universal solution for data center power bottlenecks. NVTS is trapped in a stagflationary pincer where a 3.64% Fed rate, the interest rate set by the central bank, and escalating trade tariffs have vaporized its 59.4% revenue growth trajectory. The lab sees the Fed's decision to pause rate cuts as a direct assault on high-beta companies, stocks like NVTS that move 3.14 times more than the broader market. as the yield spread normalizes at plus 0.57%. The widening gap between long-term and short-term Treasury yields, the era of cheap capital for power semiconductor R&D, is over. With prediction markets pricing only a 36% chance of a rate cut by June 2027, NVTS faces a liquidity desert. This monetary friction is compounded by a resurgence in protectionist trade policy, specifically the threat of new tariffs that turn global supply chains into geopolitical minefields. The geopolitical landscape has shifted from cooperation to the weaponization of export administration regulations, the federal rules governing the shipment of sensitive technologies to foreign entities. For NVTS, the physical security of the supply chain is now a liability as trade war escalations target D5 country designations, specific nations like China flagged for high national security risks. This creates a stagflationary headwind, a condition where stagnant growth and persistent inflation collide to crush margins. While the AI score sits at 72, the social momentum for AI infrastructure is hitting a wall of fiscal reality. Investors are fleeing to the safety of domestic production, leaving NVTS exposed with a massive 28% short float, the percentage of shares borrowed by investors betting the price will fall. The lab views this as a structural re-rating of the power bottleneck. NVTS management wants you to see a pure-play AI power bottleneck story. Gone, gallium nitride, the semiconductor material that switches 10 times faster than silicon, and SiC, silicon carbide, the wideband gap workhorse for high-voltage EVs, feeding the hyperscale data center build-out. They're leaning hard on AI demand in every investor deck, framing it as a structural tailwind that justifies their 108% R&D burn rate. But let's look at the insider ledger. Executives have net sold 509,016 shares in the last 90 days. That's not a trickle, that's a fire hose. When the people who know the product roadmap best are dumping 500,000 shares while the PR team is hyping AI demand, you're watching a confidence gap open in real time. The EPS beat last quarter was a rounding error. Actual -5 cents versus -5 cents estimate. Yet R&D spend cratered 34% year over year. That's not efficiency, that's a pipeline emergency. Management is pivoting the narrative from growth to margin discipline, but the math doesn't lie. R&D is now 108% of revenue. When a hardware company slashes R&D while the PR team still talks about AI demand, they're signaling that the next-gen product isn't ready and they're buying time with cost cuts. What management is saying is, we're powering the AI revolution. What the lab hears is, we're one design cycle behind and hoping the street doesn't notice. NVTS is currently dominating through its mastery of GaN, gallium nitride, a wideband gap semiconductor that handles higher voltages and switching frequencies than traditional silicon. This hardware edge is why they are outperforming in EV charging efficiency. Institutional conviction is undeniable right now, with trading volume 57% above its 20-day average as the market anticipates a major EV manufacturer contract. However, the engineering reality faces a massive geopolitical bottleneck. NVTS imports critical materials from China, making them a primary target for protectionist tariffs that directly erode gross margins. With a forward P/E of -107.4x, a valuation metric comparing current stock price to projected earnings per share, the market has priced in perfection. Any delay in their new product launch due to supply chain friction will trigger a rapid re-rating. The question professional analysts are failing to ask is this: how does NVTS survive the weaponization of EAR, export administration regulations that restrict the flow of sensitive dual-use technologies? The lab's analysis shows a tightening of language regarding D5 country designations, specific nations, including China, subject to stringent U.S. export bans. If NVTS cannot decouple its SiC, silicon carbide, a resilient semiconductor used in high-power applications. Today's top signal, RMBS and NVTS both flashing deep value by setups. Hit subscribe, like this video, and comment below which stock you want us to tear down next. We're engineers, not investment advisors. This is for education, not recommendations. What worked yesterday won't always work tomorrow. Review filings, understand risks, and always do your own due diligence. This is Denver Stock Lab, where hardware meets hard truth. Stay sharp.